Okay, we come to position trading YouTube channel. So right here, this is GBP CHF. Okay, now it's just me giving a brief intro into my entry on GBP Swiss francs, the GBP CHF, as we all know, perhaps. So here's my reason of entry. Now I want to make something clear, which most people don't teach. Now I'm not black shaming anybody or shaming anything like that, shading anybody. So I'm just trying to make something understandable for people that are looking for to understand entry. Now there's one thing about entry. Now, first thing, before I go wide, I would like to talk on some certain things. Now, the certain things I want to talk about is direction with alignment to entry. Now, you cannot be looking for entry, and you should not be looking for entry when you don't know the direction of that pair. If you don't have a direction where you are expecting the market to go to, then stop looking for entry. First of all, understand the direction of that market. Then you start looking for entry. Now, when you're looking for entry, for those that swing trade, maybe that is because I do swing trade and I do day trade, but I think this entry is mostly for everybody. It's not just for swingers and day trade. It's for everybody, even scalpers. Now, when you want to enter a trade, if the 4 hour for swing traders, if the 4 hour has not shown you a signal that the market is about to start going in the direction of your trade, that is in the direction that you are estimating the market to go towards. The 4 hour have not start showing you signs that, okay, see, this is a confirmation, we want to go this direction. Please, there's no need coming down to the lower time frame to start saying, okay, this one. Now this for swing traders. Now for those that want to day trade, you can easily just go down to the lower time frame and see one or two stuffs, or it's not even the trader, it's scalpers mostly. See one or two common trade setup and you just take it and go in. But if you want to swing trade, I think it's mostly for swing traders. Now, when 4 hours shows you the entry, 4 hours shows you the entry sign, you're waiting for to go to 1 hour to check if the market has aligned. I get it. Now, I'm not going to go ahead to talk on the aspect of session. No, that one is for another talk. So once 4 hours showing you your signal to go to the direction that you want the market to go to, you want to go to the 1 hour to understand, okay, is the 1 hour now heading in that direction? The 1 hour is heading in that direction, good and fine. Now, the way you understand if the 1 hour is heading in that direction is if you look at the market, the current market structure of 1 hour, because each time frame has their own market structure. I getting, but you have to wait for let's ready for a good entry. You have to wait for almost all the important time frames to align together to that certain direction that you want to take your trade. Then you enter the trade, put your stop loss in the right place, and then let the market play out. It's not like the market. Now, this is what I don't want you to do. Taking a trade entry in something like this, like now, you see right here, see this heavy fall right here, this heavy fall from up here down to here. Now, when 4 hour gave me signal to get in, this was where the market was. Right here, this is 10 o'clock right here, this low right here. Now on the 4 hour, most people would have entered and placed their stop loss up here or give it gap on top here. I get in, but I said no. This market right here is on a heavy fall. Why should I enter on such a heavy fall? Because I'm looking for a trade setup. That's the major reason people usually get in on trade. Because you're looking for you're looking for trade. You want to enter, you want to catch, and you want to make money ASAP. But you're forgetting that everything has not been set right. I get in. Now, when the market was right here, I did not enter. I was like, no, see, the market has already fallen from here to here. I get in. So I had to look at the direction. I look at from up here, down here, come up here. Maybe I should just draw it out. Maybe to here. Then the market came back up here, moved down back here, came here, came here, had this, had this, had something like this. Now I'm not taking that major spike right there. So that was Sunday, that is the market opening right there. So we had this. Now imagine, why would I want to enter? Why would I want to enter right on something like this heavy fall like this? Like at this point right there where my cursor is. If you enter here, your stop loss is going to high. Stop loss is going to be up here. And some people say, okay, no, my stop loss is not going to be high. And I'll put my stop loss on top of this area right here, this spike right here. And then I'll draw this support and resistance area right here. Maybe the market will react from here and then it will go down fine. But well done and woe to you. You can see right here, the market stopped you at. You see? Now, after this heavy fall, like, no, I'm not going to get in. I have to wait to see the market do a retracement. Now, I draw my Fibonacci. Now, I only do my Fibonacci when this area, this market, this pullback right there has started, like when the market has pulled up to this level and showed me this signal. Then I put my Fibonacci and I saw that the market just at 62% right there. And then the market showed the bearish engulfing candle right there. Now, because I want to say, I've taken the trade. Okay. Now, the major thing I want you to understand is stop taking entry in a continuation market when you know your capital is low. Most especially people that their capital is low. If your capital is big, you would have entered here, no issue. This drawdown you would have swallowed it and your stop loss will be up here, good and fine. But the market still come up here and stop here as good and fine for you too. But if you know your capital is small and you're looking for good entry too, so your account will not get blown up, and so you can last in the game, so your capital can last longer. You have to wait for something like this, a pullback like this, another sign, and then you get in. You see, right here was the last low, right here. Now, what happened? This heavy fall was the break of that low. This market coming back is like a retest of this low right here with alignment to this area right here. Now, if you look from here, you saw right here, we pushed up, come down, pushed up, like we are now heading up. I see. We pushed down, we pushed up. It's like a new, now this is a new market structure, like from here up to here. The structure is a bullish market upward on this 1 hour. This market fell all the way down here just to align with 4 hour and tell you that, okay, yes, everything is okay now. You want to sell on the 4 hour, but you cannot get in right there because you're risking a lot of money. Most especially, I'm talking for people that have low capital, most especially. Now you have to wait for this market to come back up, pull up back to somewhere either here or to this low, or because this black line right here is a neckline of, like, I think I'll say support on resistance of a 1 hour time frame. From my 1 hour time frame, I get in. Now this time frame we are in is the 30 minutes time frame. That's from where I'm explaining this in. You can see it right there, 30 minutes. Okay, let's go back to meeting. Now, if you waited and the market pulled back up here, show this bearish engulfing sign right here on the 30 minutes. Now you already have the idea that 4 hours are aligned to daily and weekly. Now, market has come back here, 30 minutes has aligned. Market structure have aligned. There's no issue to getting in. Placing your stop loss as high as up there. And then getting your target. Now, my target is not right here. I'm just using this thing to explain something for you. So some of you will not say, he's doing 1:1 risk to reward ratio. This is rubbish. And some people that have already gone out with that kind of thought in their mind before getting to this 8 minutes of the video already to hear me say it. That's your own cup of tea. So once the market came up here, it's good to enter. Now, what we don't want to see is the market go from here, come back here, and then keep pumping up. Nah. I need to exit because I kind of have understood that the market is trying to maybe create another market structure and come to hunt me. I get it. So with everything I'm just trying to say is learn to be patient. The market is not going to run. With the 4 hour align, you still need to put in another work. And that work is go down to the next lower time frame to make sure that lower time frame is aligned with its structure. Now, if you want to get good entry, you have to wait for all the market structure of each time frame to align. But sometimes you can ignore the as low as 5 minutes downward, and you can just pay attention to the 15 minutes, 30 minutes. I get in because those ones has kind of more market balance structure and understanding. I get it because you can go to the 5 minutes, 1 minute, and some people don't understand what is actually happening there. I get it, but the experience and with time, you get to understand it. So I just hope everybody understand what I'm trying to say. Thank you.